What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we will go over some of the hype sectors and the overall market, hit you with some trade zones, and what to look out for in the weeks to come. So let's get into it. All right, so starting off with NVDA, NVDA and semis in general, kind of a bellwether for the market. They led the way up and they're remaining very durable right now. So as long as they are resilient, the buyers are resilient within semis, the market probably is not going to be too bearish, Like we were looking out for the potential to be the blow off top here, but so far that just hasn't been the case, right? Like that was a very notable candle, but they just didn't build on it. And as we were saying, as long as you don't get back under 823.94, then these buyers are still very comfortable. So sellers had a lot of opportunity here to try to press the issue, and they just didn't. So as long as these buyers, again, holding over 823.94, as long as they're holding over this little balance here from 22 to 29, I believe, the same guy that we were looking out for in QQQ, I'll come back to that point later. But basically, as long as this structure is holding, you're still okay, because the gap from this the change from this gap also hasn't been negated. This gap is also pretty much the high of this guy, right? The high of the gap is pretty much the highs of this guy. So no gap fill here means no acceptance in here. No acceptance in here means no lower lows, right? So you apply that same exact logic to here, because here's this gap as well. Incomplete gap fill, buyers are very comfy, right? That's pretty much it. So, that's it for NVDA. Space for a higher low over 850.10. Anything over that's going to be good for a higher low. I think we had the trade zone, but it didn't get into it because the buyers are still really strong. So we could just adapt this, right? Like just take this and then move it up to, say, something like this. Very reasonable, right? Looking at bottom fish off of this guy. Hang on a second here. Off of like this high volume area. Right, so we'll take it like that maybe. All right, and we'll look to a projection target because we don't really have anything else. So getting stuffed at the R2 for the month right now, something like that, pretty reasonable. Looking for a pullback play. All right, again, very conservative pullback, style. If you're more aggressive or whatnot, more power to you. But this is a very reasonable setup in the near term. All right. Oops. Excuse me. All right, so that is pretty much it for NVDA. Moving on to SMCI. So SMCI, we had a pretty large hypothetical trade zone, and this was just looking for a potential break into under this low with no follow through. So basically just willing to come down into where the volume tapers off. These are always very conservative trade zones, but I think we spoke about this already. I might be confusing it because we talk about this a lot in our regular community during streams or whatever, or like our Q&A calls, like community calls or whatever. But if you are a more active trader, you're very comfortable with trading these tactics or whatever, then, my most preferred entry style, and it is kind of demanding when it comes to swing report, when it comes to swing plays at least, is to fade the moves of the key levels. So if you come down and you're testing a daily demand zone, the cheapest place to find out whether or not this structure is going to hold is going to be this point of control. So if you see, especially if you fall from a very high place and then you see a dip down under this with no follow through and then pass back over it, it's pretty much one of my favorite plays. It works. It will work time and time again. And whether or not it works, you never have any guarantee, but the asymmetry on the setup is pretty much always, quite immense. Even this drill back down through it, the pass back over is still probably reasonable R just to get risk free to the value area high, for example, right? So this is 1.27 R. Then obviously you will get, if you chop it up there, you will get, you did get further more follow through on this attempt, but if you did it here, the asymmetry is amazing just to get here, right? Just to get back to the value area high. Assuming this was a stop out, you're still probably fine, right? Like you just double that up or so, and you're still probably fine. So anyway, that's how if you're a very comfortable trader, then this is what I would suggest you do. If you're going to be at the station as well, these kind of setups are very asymmetrical. And then the next day, if you happen to miss this, the next day is still also reasonable to look for that session to session setup. All right, so active traders, you don't mean like, hey, listen, this is the only way that I think it makes sense to trade. I mean, right? So anyway, just use the references, you know, with whatever tools you like. So either way, dipped into just the top end of our trade zone. Wouldn't fault you if you were trying to use these zones blindly for not catching that because, well, barely dipped into it. I think it might have been hourly oversold as well. Yeah, it was also hourly oversold, so decent confluence there, right? Anyway, let's just carry on. So space for a daily lower high to be set. Anything under 1198 is going to be good for one. These buyers, you know, even though this was a nice hold of this key point of control from this daily demand zone, if they can't get back over 1003.54, that's a bit of a red flag. Now, that being said, even though SMCI was definitely helping the tech sector and whatnot, you know, inspired confidence at the very least. Still, you look at, you know, most of these semis and they're doing fine. AMD is still holding this daily demand zone. INTC is back over this guy. Let's see, I gotta be really far back to show you this guy over here, which is what contained price throughout all of these lows, and now they're trying to hold over it again over here. Potentially a bit of a falling wedge kind of a deal here. So MU is also at all-time highs. So even though SMCI is starting to soften up a little bit here, if they just trade sideways, which means honestly, like this original trade zone, I still think is very reasonable, even if you see lower lows here, because as long as they don't get back down to this guy, they're doing fine. And really where the volume drops off is, you know, where all of this one-way trade begins. You can see how there's still slightly these little volume bumps here, and then once you get down into this lower area under 624, it becomes a bit shakier. Honestly, even here is not really that much volume, just slightly more than the volume that was traded down here. So I still think this is a pretty reasonable bigger picture. If you initiated here already in the trade zone, you can chop this up, right? Because you're testing this key area of change, chop it up, there, stop under low. If it comes back down again, look for that same exact pass back overplay. You know, I think it's very reasonable. This is still a bigger picture, a very reasonable setup. Looking for a weekly higher low. All right, so that's pretty much it for SMCI here. All right, so for Bitcoins is pretty much in a it's in a very do or die situation here, right? The break with no follow through, obviously not the best look, but this is the little bit of structure that was sitting on top of all of this price action. You know, this was the record high structure essentially, and so now what we're doing so far has just been to backtest the point of control of that major structure that was sitting on top of all-time highs. And as long as you're holding over the point of control at 61003.36, I think is, you know, these buyers have very little to complain about. You know, I think bigger picture, we could probably blow this up. I mean, not blow this up, drag this down even a little bit more like this, I think. Because really this structure is super key. So if you haven't or oh, actually it didn't even come into the trade zone actually. So yeah, let's just make a little bit of an adjustment here just so that we can accommodate for this structure as well. Let me see the projections where it might be a reasonable place. So essentially we'd be looking to get there, right, for the year, the R3, if they're going to press the issue from here. You know, when Bitcoin is in beast mode, it definitely does get to the 3 very often. All right, so anyway, something like this, I think, bigger picture, pretty reasonable. A moment here. All the way down here. We're gonna go all the way down here because that's this guy over here, right? So this, while this is definitely the key structure, the best case scenario for the buyers is to hold over this guy. If they can't hold over this guy, holding over this fellow over here, which was the launching pad or the diving board for all of this, would still be pretty notable, right? You'd still essentially be holding over the point of control probably of all of this. Let me give it a second here to load. Actually, the POC is all the way down here, but there is still a very high volume node over here. So that's the way that I'm looking at it, right? Because all of this was dictated by this. So holding over this means not down here. That's how I'm looking at it. So I think this is pretty reasonable. You can even lower this a little bit because I bet you if you were to turn down from here that you wouldn't be too extended here. So even something like this would be okay, I think. All right, so this is a much bigger picture trade zone. Like I said, if you are a little bit more active as a trader, then you can look for something like this, right? If this occurs, no follow through down to here, pass back over the point of control, you can buy that, pass back over the POC, chop it up here, throw your stop under here. Okay, Ethereum. So Ethereum rejecting from this little bit of supply over here. I have this one marked up, this guy, because, well, it tries to support price here and then very major rejection here. And then again, that's pretty much what contained all of this price action, right? It was a battle for it recently here. And so now it sure looks like these sellers are trying to, excuse me, are trying to get back down to this guy. I think this guy is very notable. This was a major step up into new highs. It's a battle for it throughout all of this. It's a battle for it over here. So I would say then that, if you hold over this, then they should be trying to come here. So I still stand by this trade zone. I still think this trade zone makes a whole lot of sense. Daily lower highs and lower lows, definitely still showing you a lot of relative weakness. Hasn't broken to all-time highs yet. So, I think if the alt season is really going to get going, you probably want Ethereum to run, right? Like if for all traders, you probably want to see Ethereum run, steal some Bitcoin dominance away, bring some more hype into, coins that are not Bitcoin or not the AI names either. Just spread around the hype a little bit. I think that would be like the best case scenario because that's just kind of, there's a lot of projects on Ethereum, right? Like Solana has a good amount of developers as well on them, but there's a lot of projects on Ethereum. So I think you do want to see Ethereum run as well to give confidence to the space overall. So I wouldn't touch this. I wouldn't really make any adjustments to this trade zone. I still think it's very reasonable, and you can look for those plays here first in Ethereum, right? So if you get a move down here and then don't see follow through here, all right, buy that move back over here and then try to get to the next prior low first. Okay. Moving on to CCJ. So CCJ came into our trade zone and just hit our target recently. So it came into our trade zone twice and hit target actually. So I still stand by this. I rolled my 43 calls. Wait, I don't think we talked about this on these videos. That's just if you're part of the Slack community. Red Devil, he's all over the uranium space, and so on this day we bought some 43Cs, and then I missed my ability. No, I think we bought it before on this day before this big rip up, and then I was streaming, so I didn't get my exit. There's the alert for it, so I had to ended up rolling them, but I'm still in them. I think it's very reasonable, especially because like energy is so strong right now. Energy is flirting with an all-time high breakout. Right, looks like it's flagging up here. So if energy sector breaks out, they're somewhat correlated. CCJ is also flirting with the blue sky breakout. This is potentially a monthly higher low being set here, so that's why I rolled it out. Especially we had that weekly lower high, lower low, no follow through, and the daily chart is now bullish again, higher low and higher high, so space for a higher low over 40.36. And really what these buyers want to get done from here is just get back over 45.28, right? This was a very notable failure to come down to this point of control, to fail to come back down to this POC. And if we don't get acceptance under 38.87, that means that higher prices relative to this guy are being accepted, right? This is the most acceptance over that point of control that we've seen since this, right? I think it's already it's already more acceptance than that. So very, very notable, potentially monthly higher low being set. If you use this trade zone, you should already be chopped it up. This is a very notable bounce out of this zone. So chop it up, clear your stop no later than under here for now, and then see what the market will give you because this chart still looks very good. So that's pretty much it. And then moving on to TAN. And so TAN also came into our trade zone, came into our initial chop area. So if your stop is still under here, I still think it's very reasonable. You can stop it out if this, if it turns around on us and then breaks this low, stop it out, and then look for that same exact Passover play. This is actually a really nice one for the Passover play because, wait a second here. Because the market has already told you a few times that this area is important. First of all, the value area high of the structure that we're monitoring as our reference right now, that's this guy over here, has been very reactive, And so what the sellers have done so far is failed to touch down on the point of control many, many times. Doesn't mean that they'll continue to fail. So because the buyers just now failed to test the value area high, for example. So let's just say then that this occurs. It's the same exact setup, right? If you break down under here, you don't see follow through under here, come back over it, you can buy that break here, look for it to chop it up at the prior low here, right? Look to chop it up again here at the value area high, leave your stop on there. If you get both of those exits, if you're guaranteed a profitable trade, then just throw your stop under there and see if the tan buyers, the clean energy sector, can play a little bit of catch up here, right? Basically, the clean energy sector is essentially like the way that I'm seeing it is pretty much like with the small caps. Potentially a big old inverse head and shoulders here. As long as you don't get back under this guy, then you're not doing any of this. So very reasonable to be looking for these plays here. Look for a bit of like, bigger picture laggard action, especially if the energy sector starts to chill out, right? Because the XLE energy sector, I mean, like the legacy energy sector, because they kind of go, they kind of go opposite to each other. When TAN and whatnot, the solar was really strong, XLE was still getting buried. It was down here, right? 2021-ish, when TAN was up here. December, let's see, February 2021. February of 2021. So we were here. XLE was pretty weak. All the way down here. And then ever since this rip, at the same time, TAN has been weak. So they're kind of inverse to each other, which makes sense, right? Okay, so that is pretty much it for TAN. Space for a daily higher low to be set. Anything over 42.10 will be good for one. And if they can continue to find acceptance over 45.21, then they should be trying to come back up here, right? If not down here, if not here, then here, right? Break out of here, pause here, right? Hold here, come here. So if they hold here again, more acceptance over 45.21 should be here, all right? Okay, so moving on to MSOs. So MSOs did not come into the trade zone that was shared. Was it this? Oh, that was the like the potential for if we didn't come back down to here. Like I said last week, it was very unlikely. I thought it would be unlikely for us to come all the way back down here for the conservative trade zone. That being said, the trade zones that I share here are dummy proof. Like I try to make them dummy proof, meaning the probability of them coming into the trade zone is less, but the ease of running them is a lot easier because this is definitely where the change will occur. So it's always cheapest to find out relative to these zones, but if they don't come back into the trade zone, it's actually even stronger, right, than you anticipate. So again, if you're a more active type, you're comfortable breaking away from these more conservative levels, by all means. I think we laid out something very similar to what shook out here. I was saying, all right, well, because of the way that this closed, the odds of us coming all the way back down here and the move getting going were diminished. But we should look out for a potential failure to hold over this point of control because it was already a pretty strong move from the highs. But if you don't reverse this candle, if you don't get back under this structure, which is essentially, the gateway into all of this, and if you can find acceptance over this guy, well then as long as you find acceptance over this guy, we should expect this kind of a price action. And so that's where we're at right now. You'll notice that on Friday session, the sellers failed to backtest this point of control at 9.37, very notable failure. So next week, and there's a new daily higher low set now at 8.77. So next week, as long as they keep finding acceptance over 9.37, these buyers are looking really good to continue to go for another crack at this guy. This from 10.18 to 11.10 is where they failed last time. And so as long as these buyers are holding over this guy, which is what they're doing right now, they should be trying to come here. So a more aggressive trade zone, we can just move this bad boy up here. Something along these lines now would be pretty reasonable. So again, we're just going to use this guy as a guide. We're going to use this guy as a guide. And we'll use this prior low too as a bit of a reference because we definitely don't want to lose that. Right? So something like this. Even if you wanted to come down to the point, that would be a bit of a red flag, but yeah, that would be a bit of a red flag. So I probably wouldn't do anything more than something like this. Right? Your extended target is here. Because as long as over here, we should expect this. What contained this? This. So if over here, then here first. If over here, then should be here next. So I like this a lot for MSOs. All right. All right, so on to our boring old overall market coverage. So obviously price did not come into, no, this is the updated trade zone. This is one that I was planning to share, I think. I don't think we had a SPY zone yesterday. I mean, last week. Or or I've done something to it. I don't. Now that's obviously an old one. I don't know. I maybe I moved this by accident. Either way, this is what I think is a pretty reasonable new conservative trade zone, right? It would cover your point of control of this daily balance. It would cover your point of control of this daily balance. Stop out, slightly under it or whatnot. This is essentially a play for a weekly higher low relative to this little rinky-dink one. This pullback for oh I apologize. I thought that was a pullback, but I guess not. All right, so no weekly consolidation. So this is really just for a potential hold of these two demand areas, potentially also a daily higher low over 501.12 or a lower low under this low that doesn't see follow through because this guy from 222 to 229 continues to support price. So, as long as you're holding over these two structures, there's nothing for these buyers to complain about. Buyers are still looking very comfy here. So this trade zone is essentially just built off of these high volume areas that were found in these local demand zones. And if you really wanted to be, even more conservative with it, even coming down all the way to something like this is very reasonable, right? Because as long as they don't fill this gap, as long as they don't fill this gap, as long as they don't find acceptance under here, bigger picture, these buyers are okay. So I think that targeting is just based off of like a projection for the month or something. It is. Just R2 for the month is up here at 527. So if you hold these, don't allow acceptance through here, they should be trying to come here. All right, so buyers looking totally fine. No red flags yet. At the bare minimum, what the sellers need to get done in the next week is to just get under 518.22. They didn't even close a gap yet. The high of this day is 520.62. The low of this day is 520.60. Oh wait, they did close a gap. Hang on. High is 520.62, 520. Oh no, they didn't. Yeah, so they missed the gap by over 50 cents. So the best case scenario for these buyers is no gap fill. If the sellers can't fill this gap, that would be very notable. So if you no gap fill here and then higher highs, they should be trying to come here. But if you do fill the gap and the sellers continue to press the issue into the next week, eyes on 518.22, these buyers will be most confident. Actually, I'm sorry, most confident here, but still very confident if they can hold over 518.22. All right, so that is it. Moving on to QQQ. So QQQ, I think we had one busted setup, but the busted setup was based on, okay, so the hedge idea, right? The hedge idea is a busted one. However, I did give you that caveat, right? Like that's probably not what not going to work unless the semis soften. And as we already discussed, the semis did not soften. So this is a situation where, I don't think it's unreasonable for you to have made that attempt, but I do think it would have been worthwhile to consider, like I said, the context of the semis, because if those semis keep staying strong, and if these super hype markets, because some of the tokens, the coins that are the crypto coins that are at all-time highs are like AI related, so it's all related to these AI semis and etc. So as long as that was the case, then like I said, I think caution is warranted for the hedge. The sellers actually continue to prove nothing. The sellers have proved nothing. They did not. This was another opportunity for these sellers to close this gap, and they did not. So these higher prices relative to this gap, relative to this daily range, are still being accepted. So these buyers are still very comfortable here. That being said, okay, an initial break with no follow through again, not the best look. If you continue to see lower lows on Monday, then we're likely seeing another test of at least this 440.59 level. It's pretty much been a battle for this after they failed to hold a back test of it. You can see how the highs of these two sessions, the lows of this session, right? These lows are like, here, hold on, let me just show you what it looks like battling around it. Right, intraday, there's so much activity around this level. So the goal for these buyers is to hold over it, right? Because that was the breakout point. They want to hold over the breakout point and then press into new all-time highs. So if they can stay over 440.59, that's the best case scenario. But as long as you don't fill this gap, these buyers are also still very comfortable. This daily range, the lows of it is all about gap, incomplete gap here, right? So as long as that's the case, this change is being affirmed. All right, so space for a daily higher low, anything over 433.33 is going to be good for one. And same deal, they didn't close this gap either. The best case scenario next week is no gap fill back down to 444.11. All right, so like a 38-cent gap. Anyway, key all-time high resistance 449.34, and again, no red flag. So you can also move this guy up. If they're not going to come down, now that you've had another move higher, it sure looks like there's still demand coming out of this zone. So something like this, be pretty reasonable. And again, the same caveat, right? Like if these semis start weakening to next week, Monday, if they start weakening, then okay, this idea is less desirable. Hold on, let me just look for like a projection target or something. Let's just go over R2 for the month, eh? Okay, so that's pretty much it. Very reasonable trade zone, trying to get up to 455-ish. All right. All right. So let's see the Dow. So this isn't. I don't think we did a trade zone last week. So this one is just, I did this on Friday in preparation for this video. Daily no change level is 392.84. As long as these buyers hold over 392.84, then they are going to be remain the most confident. But even if they can just continue to hold over this local daily demand zone from 222 to 319, they're also going to be very confident. So I think this is a very reasonable trade zone because you're going to cover both of these demand zones, points of control, and then the volume kind of drops off over here, right? So the best case scenario from here would be to not allow these sellers to trade through this big old block of volume. So I think this is very reasonable, essentially a play for a daily high or low. Anything over 386.04 is going to be good for one. This targeting is, I think, based on projection as well. Yes, it is for the monthly R2. And that's really it. No red flags either here, right? They have to trade under this local demand zone, flip it into supply, trade under it like this in order for these sellers to do any kind of proving. They need this. All right, so anything short of that is no big deal for these buyers. All right, so IWM is testing this key spot from back in 2021. It's this guy over here is what held price throughout all of this. It's what rejected price here and here. And so now it's been a battle for it. So this idea was just for a hedge. And so, this is a situation where if you traded this blindly, well, first of all, if you did, the setup that I like to do, the pass over the point of control with no follow through, you sell this. Hang on a second here. You sell this move back under the point of control, and then you throw your stop over the high. That's very asymmetrical. You could already be, taking some partial profits here, be more than risk-free, and then see what the market will give you here. Because even though this setup is working for now, bigger picture, these buyers are still okay, right? Because as long as they're holding over this point of control, 199.26, especially if the sellers continue to fail to touch down to 199.26, that would be a very notable failure on their part. And there's a lot of space for a higher low to be set over 199.66 right now. So, I personally, if it were me and you took this position, I would definitely be looking to chop it up no later than 203.01. I personally would have probably already done it, but no later than 203.01 because that's really where the change should occur. Right? You'll notice that this prior low made for these highs here, and then you didn't see follow through on this prior low. So if these buyers are going to play solid defense here, they need to defend this 203.01. Okay. So that is it for IWM. Yeah, that's it for IWM. The best case scenario for the buyers now, hold over 203.01 and then get acceptance over 207.61, right? Because acceptance over 207.61 means we're doing this. All right. So that, we got one more here, the dollar. Okay, so the dollar, I think we spoke about this, unless it was during one of our streams or whatever, but the key going into last week was just the battle for these two. And when you're assessing who, what's going on there, it's in no man's land between them, right? But at that point, 1, 2, 3, 4, 5, at this point in time, you would have had to give in the slight edge. I think we did talk about this last week. The slight edge to the buyers, right, out of this demand zone, because the buyers held the value area high and then prevented a backtest of the value area high here, whereas the sellers allowed for a break of their point of control, right? So, you can just kind of assess who's winning based on what their response was. For example, when the competition was between this area of supply and this area of demand, right? So we're focusing on this guy and this guy. Right? Focusing on the battle between these two over here, right? And so, hang on, let me just give it the most screen space. And so what happened here? First, you have a move up, right? You hold this guy, and then you come up to here, okay? And so they reject from this point of control. that is this team saying no, right? We reject you. And then the next time you come back around, this team holds it really well. And so you think, okay, these guys have the edge now, right? But then on this rally up, they fail to even get to the value area high. So to fail to get to the value area high and then come back down under this daily no change level was a red flag, right? That means that this team was now pretty weak because this was their response to this move. And in order for them to have at least met the same to essentially clap back, right, to respond in the same fashion, they would have had to have responded by touching this point of control, which they did not. So this is a matter of just looking out for when, what the market doesn't do. It's very important to not just look out for what the market does do, but what the market doesn't do as well. Very good information. I know it's pretty much, two sides of the same coin, but it's that slight perspective shift does offer different insight. Okay. So, we have the VIX, right? So the VIX really not doing much of anything as well. It continues to be stuck under 15.44. As long as you're holding under 15.44, then the volatility relative to that October low is still minimal. This October low was at October 12th. That's this guy, right? Let's see, October. That's this. That's October low here, right? Or roughly a little bit before it. So. Yeah, I think you really need to see a VIX back over here in order for there to be, any more fear relative to what we were looking at, back here. Pretty much it. So that is all. Appreciate you tuning in. Thank you for sharing some of your time and energy with me. If you got anything from that video at all and you made it all the way here, if you wouldn't mind giving us a like and subscribe, we would very much appreciate that. And if you want this style of trade ideas sent to your email and through our website every week, fresh ideas, fresh off the presses from me and Dan, then check out the swim report. Links in the description below. And that's it. So I hope to see you all next week. Farewell.